Let's bring in Ed Yardeni. He's from Yardeni Research, obviously, whether this rally's gotten overextended. Nice to see you. Welcome back.
Thank you very much, Scott.
I mean, you do point out that the tech sector at large has a valuation at near 31 times.
Correct.
What do I take from that in terms of a strategy or how I should be thinking about this market in the here and now?
Well, look, I think there are clear signs that we are in the early phase of a melt-up. And one of the signs is that I was expecting to see the S&P 500 at 5,400 by year end, and here we are at 5,500. It's basically mid-year. So, you know, I feel like the bull market has kind of left hoof marks all over me because it's been so powerful. Same thing happened to me last year. I thought we'd get to 4,600 by the middle of the year. We got there by the end of the year. We got there by the middle of the year. I would say that this is a melt-up that is both earnings-led and valuation-led. If it was just all valuation-led, I'd be very concerned about too much speculative excesses. But the reality is these tech stocks have moved on better than expected earnings, and lots of news that suggests that the AI revolution really is boosting their earnings.
Sure, but you know there are valid questions that have been asked today, yesterday, and in days prior. For NVIDIA, for example, whether it's over-earning. You've heard those words used. I find it interesting that you said we are in the early phases. This looks like the early phase of a melt-up. Some would look at the activity in NVIDIA and say, well, that doesn't feel like the early phase of a melt-up. This feels like we're in, you know, the later innings. We're about to bring in the closer.
Well, I think the comparisons that are being made are to the late 1990s, and we saw Cisco go straight up and then straight down. Back in those days, there were a lot more excesses than there are today. Back in the late 1990s, companies that made telecom equipment, many of them financed their buyers. In other words, there was seller financing, which is a very dangerous way to run a business. There was also a lot of dot-coms that got a first round of financing, bought a lot of equipment for the internet, and then didn't get the second round of financing. This time around, NVIDIA's getting purchases from very rich technology companies that can certainly afford to buy its chips. Look, I think the GPU chip is basically a fast computer, and I think that while everybody's been trying to figure out what artificial intelligence is all about, I think it's really big data on speed and on steroids. And I think the whole idea that we're going to be moving and having some quantum computers, I think GPUs are the kind of the quantum computers. So we've got a technology here that we just saw Accenture, for example, report that some of its earnings were boosted by using AI.
I know everybody's going to claim that, though, Ed. You know that. Let me.
But the stock is up on legitimate news.
Well,
I mean, they didn't just make that up.
No, I get you, but I mean, a lot of stocks are up over a significant period of time because if you've mentioned AI, like they're going to start saying that hamburgers are being made more efficient because we utilize AI, and that's helping the French fries be crispier.
Hold on, Scott. You've got some real companies announcing some solid information. I mean, Dell is going to be providing some AI-related technologies to Elon Musk, and Elon Musk is going to put a lot of these technologies together to build a supercomputer. I mean, he has more often than not delivered on what he said he was going to do, and I think he basically views GPUs as supercomputers when they're all put together, and I agree with that.